Hi everybody, this is Osprey from MyChartCoach.com. Thank you very much for viewing this video. We're going to take a look at some Bitcoin and blockchain stocks. We'll look at some that have been pulling back. We'll look at a few stocks that are in play, and a couple of the marijuana sector stocks as well. Okay, so first up, let's look at LTEA, Long Island Iced Tea Company. I guess they're changing their name to the Long blockchain company or something like that. But yeah, it closed up 183% here today. It had the big gap up open on the news. Notice this is a thinly traded stock. You know, it has very low average daily volume, so that always is a red flag. The volume was there today, but there was a big pullback. You can see the open was right here around $8, and it closed below the open, forming a black candle. The long upper wick on today's candle does show profit taking, you know, possibly dilution. They could have been selling some shares into this rally. With today's candle floating above the upper Bollinger Band, the candles could work back into the bands. So if it drops down there below this 615 or so support level, you know, you could see this gap fill, maybe not the entire gap, but you could see the candles work back into the bands. And then what you're looking at is this first support level, which is going to be the 300-day simple moving average and EMA 4 right here at 409. Notice the big volume spike. So it was a big parabolic move. It has the black candle. When that forms, the signal is to head to the sidelines. As you can see here, the black candle formed on the 15-minute chart on the first candle of the day, and that was high of day. This is the climax spike. All the magic happened within the first 15 minutes, and the share price never got back above that level. So now what you have is a very tight Bollinger Bands. This is the upper Bollinger Band, this is the lower Bollinger Band, the two solid purple lines, and the candles are right on that middle Bollinger Band currently at 692. So this is going to be really simple. If it breaks through 727, that's going to be a signal that it wants to head higher. If it drops below 658, that's going to be a signal that it's breaking down. If it drops to the downside, then you're looking at the 50 simple moving average at 479 as your first support level. To the upside, what you want to see is a break above this 775 or so level, the closing price in the second candle of the day. That was the high close of the day, and so if it can break above that, that'll signal that it wants to head higher, and it could possibly run back up to 950. You know, it was in a very tight channel today, so you know, you notice how the lower Bollinger Bands lined up at the bottom of the channel. If it breaks below that, that's going to be signaling that it's consolidating. Okay, let's look at GROW. Yeah, this stock, you know, it had been on that really nice uptrend, and now it's on a 3-day pullback. You know, the share price is still, you know, holding that middle Bollinger Band level, which is the key support level. It's currently at 478. That's the dotted purple line. It closed just below that level today. So this is where it needs to hold and bounce. After a 3-day pullback, it really needs to find support, similar to right here on December 5th and 6th, where it pulled back, tested the middle Bollinger Band, bounced off, and kept going. You know, when it was back here in November, it closed below the middle Bollinger Band, and it dropped down towards that 50-day simple moving average, the green line, and then it got back above. You know, it's going to be a pretty big drop if it heads down towards that 50-day simple moving average. So it really needs to find support here soon. So this uptrend, you know, is in risk of breaking here if support, you know, if this middle Bollinger Band turns into resistance. So yeah, bulls do not want to see that happen. You know, you have EMA 4 up here pinched with EMA 8. Notice how EMA 4 is at 530 and EMA 8's at 531. If EMA 4, you know, so it already hasn't started crossing over to the downside, and so that's a bearish crossover. You know, that's a red flag. If the candles start, you know, continue, you know, they started riding EMA 4 resistance lower here on the 19th. If they continue with that pattern, that's going to signal more downside risk. Okay, let's look at MARA. Okay, so yeah, this stock, you know, it pulled back, and now it dropped below the middle Bollinger Band. So that's the big red flag. It dropped below the middle Bollinger Band at 523. That was the big level to hold. That failed to hold today. It dropped all the way down to 490. It did bounce. So tomorrow it needs to get back above 523. If they can get back above 523, then you're looking at wanting a break above this 630 or so resistance level, the closing price in the 18th. That's going to be the big level, and then you have the close right above it at 650. So this little resistance zone right here, if it can get above that, but you know, break out above 650, that'll signal that it wants to head higher. Now if that 525 zone turns into resistance, that's going to signal downside risk, and then you could see the bottom. You could see the 300-day simple moving average and the bottom of this channel here down here at 384. That would be the target if for a potential bounce if the middle Bollinger Band turns into resistance. Notice how you have the MACD bear crosses. It's below the middle Bollinger Band. This is the bottom. So we'll see what happens. So yeah, so it's going to be very important that these stocks bounce tomorrow. Okay, so SSC is it's still above EMA 4. So this is been holding up better than a lot of the other ones. Notice that even though there was a red candle today and it closed down nearly 5%, it's still holding the pink line. It's still holding EMA 4 at 497. As long as that level is holding, this chart's still super bullish. What happened is that it formed this black candle on the 20th, and that signaled that it was getting a little frothy ahead of itself. Notice how the candle formed above the upper Bollinger Band. The candles just worked their way back into the bands. So as long as this $5 level is holding, the chart's still very strong. It's just it got ahead of itself. It's taking a pause. Now if that $5 level breaks, that'll signal downside risk. That it could consolidate, and then you're looking at EMA 8 at 444. What bulls don't want to see is a retrace all the way back down to the middle Bollinger Band. A similar move to this back here in November, where it got above the upper Bollinger Band, worked its way back into the bands, and then it ended up retracing all the way down to the 50-day simple moving average. So yeah, so it's going to be real important that it holds that. That's going to be your clue if it drops below EMA 4 that it's breaking down further. Okay, take a look at TEUM. So yeah, this is another one of those black candle. This is why I say the rule is to go to the sidelines when you have an uptrend, multiple white candles. You have a gap up open. This candle, okay, opened above this candle, and then the candle bodies forming above the upper Bollinger Band. Those are the red flags to just head out. And then if those 3 red flags weren't enough, if failing to close above the blue line, which is the 300-day simple moving average at 168, those were all signals on this candle right here on the 19th. Just lock them in. I mean, it was already on a 4-day run. When you get a multi-day run going, you've got to be on the lookout for a red candle coming. And so that's what happened here. The candles work back into the bands. Similar to here, the black candles form above, they work back in. And so what's going on now, it's hitting EMA 4 currently at 139. It closed just below that level. So the chart's still really bullish. It could bounce off of this. And then once it gets above 168, that's going to be your signal that it wants to push higher. If it fails to get above that level and this support level breaks, you're going to be looking at a potential drop down to EMA 8 at 124. For a bigger drop, you have the 100 and the 50 and 100-day simple moving averages lined up with the middle Bollinger Band, all down here at $1. So that would be on a big correction. Let's look at OTIV, and if the middle Bollinger Band held, the uptrend would still be intact on the chart. That would be the reload level. Okay, let's look at OTIV. So it's down 10%. It got ahead of itself. Once again, when you get the candle forming above the upper Bollinger Band, that's a signal that the candles could work back into the bands. So, take that as a warning for over here on the LTEA chart. This candle way above the upper Bollinger Band. I've just showed multiple charts where the candles have been working their way back into the bands. So it's a proven theory. And so yeah, you don't need to try to be a hero and prove it. It's got to, every once in a while it works out and you get saved, but the odds are it's gotten ahead of itself, and it's going to take a pause and take a breather, and that just gives you a chance to exit and reload lower, which is a good thing if you're a trader. And so this candle here formed above the upper Bollinger Band. Now the candles are working back into the bands. It closed once again below EMA 4. That's not what bulls want to see. They want to see it get back above 172. So if 172 turns into resistance, you're looking at a drop down to 156. It could come down all the way down here and test this support zone. You've got the 20, 50, 100, and 200 and 300-day simple moving averages all lined up between 126 and 137. So that would be, if it dropped down to 137, that should be a good bounce level. Keep in mind there is a big gap on the chart. If it dropped all the way down to 110, it would fill the big gap. And so that's the one thing that you have to keep in mind with penny stocks. With the big board plays, they're not as bad, but the over-the-counter stocks, they usually always fill gaps. So the share price ends up pulling back and and filling that space. So let's take a look at DNR. We're going to change gears a little bit here, and this is an energy sector stock. And it's really heating up. Okay, so it's been on this nice run. It's still at 66 on RSI. This is a chart from earlier today, and so you have RSI and Fasto in the bull zone. You have a bullish crossover on ADX back here, and so notice it's been on this 4-day run. You know, multi-day green volume bars. You know, it's been cruising basically since this bottom here, and so what's going on now is it broke above the key resistance level. The top of this channel was 190. Notice how that was a top here and then a top here. And so today the close above that is signaling that it wants to head higher. Now if it pulls back below 190, that's going to be a signal of consolidation, and it's still in the sideways channel. And then you're likely to see a drop down to the middle Bollinger Band. It needs to hold the middle Bollinger Band to keep the new uptrend going. You know, so right now it's at the top of the channel. You know, this is the bottom. You know, this is the top. And so now it's made it back up to the top. You know, it closed above, so that's really good, but it has to stay above. It needs to stay above 190. Drop below 190, that's a red flag. Hold 190, and then you're looking at a potential run up to 210, which is the top of this candle. Okay, let's look at RNN. This stock is heating up as well. It closed up 10% today. So yeah, it had the nice volume spike, and then it had the close above the 50 and 100-day simple moving averages and the middle Bollinger Band. So notice down here it was the largest volume day since back here in November. And so after, you know, it got walked down on light volume, and then bam, it's got the big volume today. You know, nice volume spike. I wouldn't say big volume, but it has a nice volume spike, and then it has the PSAR bold flip. The green dots flip below the candles. SAR stands for stop and reverse, so it's signaling the possible new uptrend starting. And then what you have is you break above the 50, the middle Bollinger Band, and the 100-day simple moving averages. And so if 215 holds, that will be bullish. Right now it's hitting this gap level, so there's a gap back here from October, and so this candle is the bottom of the gap, the bottom of this candle, and the top of this candle is the bottom of the gap, and this is the top of the gap. And so it's currently hitting bottom of gap resistance. The other key resistance is the closing price here on what is that, 24th of November. And so if it can get above the bottom of the gap, 225, then it's this closing high close in November to break. If it can break above it, it looks like about 232, then it could run up to the 300-day simple moving average at 258. A gap fill would be all the way up here around 282 or so. That would fill the gap. If it went up to fill the gap, it would likely hit that 200-day simple moving average. If it fails to break 225 or 232 when tested, that could signal a temporary top, and the candles could pull back into the bands. That you really want to see it stay above that 100-day simple moving average at 215. Now that it is above that level. Okay, let's look at CERC. This stock has been on a monster run. It's up 40% this week alone. It has just a great uptrend going. Notice how, you know, down here it double bottomed in May and June, you know, and then it's been just on this nice uptrend. And this week, so it's breaking above the 100-week moving average at 202. So we've been doing some updates about this. You know, we've been doing some updates on this chart, or you know, putting videos out on this. And so it needs to close above that level. If it closes above that level, that's going to be very bullish. Now you can see it's also breaking above this 2016 support level. That's very bullish. And so the resistance that it's hitting now is from back here in February and March of 2016 and this December of 2015. Okay, so that was this double bottom level or whatever from back then. And so that's the top of the wick from this week. And so if it can break above that level, get above that 380, 390 level, then it could run up to 360. That's where you have the cluster of candles here. And you know, support back here. And so that should be another resistance level. Get above 360, and you could see it run back up into the fives. It looks like it's filling the jar, you know, that it's working its way back up to that level. You know, there was huge loading down at the bottom. You know, you had the big load, and then they filled up some more, and yeah, it's getting pushed higher. Okay, let's look at TWMJF. This is Canopy Growth. It has a really nice uptrend going. Okay, so you know, it's been in it's been in a sideways channel, but it's on this recent breakout higher. It started in December on the close above the middle Bollinger Band. So you could see it closed above the dotted purple line, and then so it's been working its way higher ever since and breaking key resistance levels. You know, the closing price here on the 13th of November was a big level to break. It got slightly above it on this candle on the 18th, and then it busted out above on the 19th, and then now today it's breaking, you know, it closed above the closing price on the 19th, so it has a new high close, okay, and it closed above the recent high here from November 7th. So it's signaling more upside potential. You know, it needs to bust through the top of this and to take it to the next level. Now, if it drops down below the middle Bollinger Band at 1516, that's going to signal more consolidation. What you want to see now is 17 turn into support. You want to see it stay above 17 and push above that level. If it pulls back, it really needs to hold 16. If it drops back below 16, that's going to be a sign that it could continue this sideways pattern. And if you look here at the TWMJF, the Canopy Growth, WEED Canadian Toronto Stock Exchange ticker, they are the same company. You can see it's out here making new all-time highs. So you know, this was the high from 2016, and then you know, the high that I just showed you on the daily chart. You know, it's pushing above that level, and so this is what we call blue sky breakout. This stock started trading back here in 2014, you know, and it was down in the threes, and so now it's hitting levels that it's never seen before. So it's going into uncharted territory. So when that happens, you know, you just need to follow the intraday charts to look for signs of it breaking down if you're a trader, and if you're a longer term holder, you know, notice how this has been, you know, since it broke above back here in July, the middle Bollinger Band, you know, it's been holding EMA's 4 and 8 support the entire time. You know, it hasn't been closing below EMA 4. You know, it's just been the signal the entire time is just keep riding. Constellation Brands just took a $200 million stake in the company. I think there is some more upside potential. Okay, let's look at BLOZF. Okay, so these guys do the marijuana breathalyzer, and that is actually a big thing because there isn't really there aren't good devices on the market. So it's an open market right now. Whoever comes out with a really good product, they could get some big contracts across the entire United States. You know, this is a Canadian company. And so what's going on now is it's trying to break out of the sideways channel. It has the closing price here on the 15th of November. Okay, so that's the big level. It got above it last week, and it looked like it wanted to break out higher on this candle right here, but it pulled back this week, and now today it's right back at that key level. And so it's been struggling. If it can break above that 140 level, that 150 level, that's going to be a signal it wants to head higher, and then it's really that 160. So 150, 160, close above both of those levels, and that's going to be a signal that it wants to break out higher, and then you're looking at the 190 level as the next target. So yeah, so keep an eye on BLOZF. It looks like it's setting up to possibly push out higher. Okay, let's go back to some of the blockchain cryptocurrency stocks, and BTCS is one that a lot of people are in. It closed down 20% today. They do have a merger on the way. I haven't heard that it's been canceled, so you know, they've you know, had put out press releases that there was supposed to be a merger coming, so people are anticipating that news, and so yeah, this did have the nice breakout, so that was really cool. Congrats everybody. A lot of people were loading down here in the 10s and 11s, and so yeah, that worked out well. It had the big breakout, the big percentage gains. Just keep in mind, you know, when this black candle, the spinning top formed, you know, first there was a spinning top on the 19th, and that was a red flag, and then another one formed, you know, both above the upper Bollinger Band. Those were clues to just lock in gains and go to the sidelines. The candles forming above the upper Bollinger Band, you know, they were indecision candles. There was big volume spikes. You know, it was just all signals. It's easier to sell into strength as the stock's still moving up. If you wait until the red day when everybody's selling, it can be much more difficult, and you'll end up you know, selling for much lower levels than you would like. And so yeah, so always try to sell into strength. And so it pulled back and it dropped below EMA 4 at 22 cents. It needs to get back above that level. If that level breaks, then the big level to hold is going to be this October high close. So that's at 18 cents. You really want to see that turn into into support. That was the prior top of this channel, of this multi-month channel, and so you don't want to see it drop back into the channel. If it dropped back into the channel, it could get going with this sideways action again. So it really needs to stay above 18. That could be a good level to look for a bounce. You know, EMA 13's at 17. If it drops below both those levels, then it's the middle Bollinger Band and 100 simple moving average at 14. Okay, let's look at MGTI. This is going to be the last video on this chart. This is another one that was doing really well, and then it pulled back down 20% today. And so the big drop below EMA 4, you know, is a red flag that had been holding during the run, and it did hold EMA 8 at 505. So you know it's right above that level, that lime line. You want to see that level hold. It bounced nicely off of the EMA 13. So if that 505 level breaks, then just like how this bounced off of EMA 13, that level is going to be on deck again. And so you want to see that level hold. If EMA 13 were to break, then you're looking at the drop down to the middle Bollinger Band, and then yeah, you know there are some unfilled gaps on the chart, so that is the red flag. So check it out. So here's a gap, you know, so a drop down here to 425 would fill the gap. That's likely to fill, you know, and then there's another one down here, you know, so they might drop this down to the middle Bollinger Band just to fill these gaps. That's why gaps are no good on the chart, because gaps get filled, especially for over-the-counter stocks. It gives the market makers a target. And look how it's lined up perfectly with the middle Bollinger Band. And when stocks are running, you know, the top, when they're a nice uptrend, the upper Bollinger Band is the top of the channel, and the middle Bollinger Band is the bottom of the channel, as long as the channel remains intact, as long as the candles don't drop below the middle Bollinger Band and start a downtrend. So yeah, so if you exited up here, you know, between 7 and 8, and you're waiting for the pullback, you know, if it dipped down to the middle Bollinger Band, that could be a good low re-entry as long as support held. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, come check out our chat. I'll post the link at the bottom of the video on the YouTube page. Okay, thank you.